Yo, what is good, boys? This is finally the long awaited Forex strategy that you guys have basically been begging me for. Um, I've been getting all types of DMs and comments asking me how I'm taking these trades and what I've been doing. And this is going to be a full video explaining how I've been trading. I do use this strategy on gold only, but this will apply to every single pair on Forex. Um, and it could be used across all sessions. So we could just go ahead and get into it, and we can start off with the sessions. So I am on Central Time, which is UTC -5. So you're gonna have to convert this to whatever. If it's New York time, I'm 1 hour behind New York, so this is exactly what I do. So let's go on a 30-minute. When I wake up, 7 a.m. is when I'll trade. So that's going to be the start of New York session. Not 8:30, which is New York Stock Exchange open. 7 o'clock is going to be when Forex opens. Okay? So then at 2 a.m. for me is London session. And 7 p.m. is Asian session. So Asian session and New York session start at the same time. We're not using Australian Sydney session. We're not using that. And we're just trading the open because that's when all the volatility is going to be there. So 7 p.m., 2 a.m., 7 a.m. Or New York time would be 8 p.m., 3 a.m., and 8 a.m. So if you go on to the 15-minute, the first part of this strategy, let's get some drawings. First part of this strategy is going to be the liquidity. And I know most of you already know what liquidity is. And this is where orders are being filled in the market at highs or lows. So the banks basically push the market up because there's a lot of orders there so they can get their orders filled and push the market to the other direction. So let's draw. So let's say Asian session starts off. It goes up. I know there's not a lot of volume in Asian session, but goes up, goes like this, and then comes down. And then London session, according to our strategy, London session will either come for these lows or come for these highs. So there's no daily bias in this. We're just going off of the reactions of the market. So let's say London session does this, and then it goes up to these highs. And then we're going to be looking for a break of structure. So we're expecting that these highs get respected in each session. So then if we make this high and this is the low, whenever New York session opens, we're expecting this high to be respected and this low to be respected, okay? So if we get rid of all of this, we can actually go over break of structure for those that don't know it. So break of structure, we know that market moves in higher highs and higher lows. So this is how the market usually moves, with extensions and pullbacks, or they're called retracements. So whenever we see, let's say this was the other session, we see it come into this high, we're going to see that there's a higher high and a higher low. Whenever that higher low gets broken, or there's a break of structure or a close below, that's when we know we can expect market to go in the opposite direction, so we can actually enter into a trade. So that's the second thing that we need. And this is only 3 parts. This is a very simple strategy, and it's been working wonders for me. So after we see that, we're going to go and look for a fair value gap. A fair value gap comes after a very strong move in the market like this. Let's say we have our high, come into the high. We're making higher lows. We break those lows. When there's that strong move that breaks, there's going to be an imbalance. It's a 3-candle pattern. A fair value gap is a 3-candle pattern. So there's going to be the wick, of each candle is going to be like this. Boom. So the next candle is going to open here like this. And then the next candle is going to open like this. So this, where the wicks do not align, is the fair value gap or the imbalance. I know I'm not an artist. Just trust me. I'll show it on the charts. This imbalance is what we're going to be looking for, and to see it to come into it and react, or in the other direction, go up and react down out of it. And then there's a break structure. So we can go ahead and go onto the 30-minute and mark out our highs. So I actually have an indicator for this. I don't trade with indicators. I just use this to mark out the sessions to see where price wants to go. So if we go back, let's just go to a random day. Okay, so this right here is going to be open. Let's go back. Okay. So in between here, this light gray is going to be London session. So I'm only going to be looking for trades from 7 to 8:30 a.m. And that's Central Time. So we're going to mark out these highs. How I mark out the highs, as you can see, go onto the 30-minute time frame, and we're going to mark out the highs, but only the wicks. You want to find the low that's in the session. So this candle opens at 2 a.m. and the high was made in the session. So we can't use this as a high because it wasn't made in the session. It could be a high, but it wouldn't be London's high. It would be Asia's high. So if we're looking for London's high, we could still expect, if London never came in and reacted with these highs, then we could also expect New York session to come back and go towards those highs, but it doesn't have to. So we mark out these highs on the 30-minute time frame. We're only going to mark out the wicks, and all the low, there's only going to be one high and one low. We're not going to mark out multiple, just the highest and the lowest. So you mark out the wick, and you're expecting price to come into that range. So this is September 17th. Okay, so market opens here at 7. We can see we get a strong push downwards, and what we're looking for is, so right here we have a fair value gap. We can see that gets tapped into, which is that 3 candle pattern, 1, 2, 3, and there, this is between the wicks. It gets tapped into, and yeah, this one would have been a loss. So let's find a different one. Okay, here we go right here. And obviously, we're not going to win every trade with this. And this is the trade I actually took. So we go on to the 5-minute first. What do we see? Price is already in these lows. So we can expect for price to go and target these highs or any other highs. So first thing we see is a break of structure. A break of structure on the 5-minute time frame. We're only looking for break of structure on the 5-minute time frame. So I see that, and we're going to go on to the 1 minute and look for a fair value gap that gets respected. So right here, we can see that 1 minute imbalance right here gets respected. That's that 3 candle pattern, 1, 2, 3, and in between the wicks is going to be that imbalance. So we're looking for a close outside of it. We're going to put our stop at the lows, and we can target previous highs. Let's see if I can find it. Okay. So, and you can see that's where the imbalance can come before or after the break of structure. So it comes on the same candle as the break of structure, which is fine. And we put our stop at like just a little bit below these lows, and you can target this high, this high, this high, or you can go onto the 30-minute and you can use this high, which was London's high, as a take profit point, which is exactly what I did. I took this trade, which gave me a 2 risk reward. So let's write out what we're looking for. Number one is going to be, let's change this. First, we're looking for previous session highs and lows. Only the wicks. Okay, and that's on the 30-minute time frame. Second, we're looking for a 1 minute fair value gap. That's that 3 candle pattern. Okay, number 3, we're looking for a 5-minute break of structure. Remember, we talked about higher highs and higher lows. Whenever price breaks that low or closes above an old high. So we came into these lows and we closed above this high. So on a break of structure, you're just looking for an up candle or a down candle when you want it to be up. Another example is right here. Right here, this candle is the most previous low. Actually, it would be this one right here. This is the closest low. So whenever we're going to use that, we want it to break below that. So we can see you have a down candle, up candle. And when we want it to be a break structure to the downside, we want it to close below that low. Because see, we're making higher highs, higher low, higher high, higher low, higher high, higher low. And then we want to see a lower low by a candle disrespecting that other low. So now we're seeing lower low, lower high, lower low, lower high, lower low, lower high. We see that high, we want it to get closed above. So this would be our break of structure. So 5-minute break of structure. And that's about it. That's the whole easy way to explain the strategy. So we can look at other examples before we get into the second sort of part of the strategy. So this you can see these lows here, but I don't want to be taking a trade after 8:30. So every trade needs to come before 8:30. 7 to 8:30 is my trading times. And you don't only have to use look, let's actually go to today. So today, this high got closed above. So when the high gets closed above, that's not one we're going to use to short. So, but then I see that Asian session opens right here at 1900, and there's a high right here. So I can use this. I can use any previous session's highs that haven't been tapped into to take a short, or any previous session's lows to take a long. So then I see a break of structure right here. Let's go down to the 1 minute. On the 1 minute, we already filled this giant imbalance. So we already had our fair value gap. We can go ahead, enter on the break of structure. Stop right here. Target this low. Target the bottom of this fair value gap. Target this low. Like, you just have to play around with the stop loss and take profit. Because I would have put mine like right here above this small fair value gap, or even like right here. And I would have targeted this low. And that's about 1 to 1.62 risk reward. I will never take a trade if it's less than 1 to 1.5. So when this risk reward ratio is less than 1.5, I don't want to take it. I want to get around 1.6 to 2 RR every trade. So with stop loss placement, you just have to play around with it. So now we can get into the second part of this strategy, which is when highs get closed above. So like I said, this high got closed above, so we didn't want to use it. So what I do is when a high gets closed above, I will not use it to take shorts. But in this situation, this high got tapped, so I did take shorts. But let's go ahead and draw this. Where's the drawing tool? Am I blind? Okay. So we have a high here. Why is it all squiggly? Okay. So we have a high. And then, well, whenever this get closed above on the 30-minute close above, I know it's not support and resistance because I don't believe in support and resistance. I don't trade support resistance. But when this high gets closed above, we can see this come back into this high and react off of it and use it for longs. When the same thing in the other direction, when we see this and we see this low get closed below, we could see it tap back into this and go lower. So what we want to do is be able to take more trades and understand that the market is going to give us different setups for different things, and that this is not always going to work consistently every single day. You're going to take losses, but you have to learn to adapt to the market. And this is what I've done with this strategy. Is I've been able to, I did not make this strategy. I did learn it from TJR. He made it, but everything I've learned, I've adapted it to myself in my own way. So I don't know if there's a good example of this. Yep, here it is right here. So we have highs here from London session, the highest high and the lowest low. So what we want to see is, usually we want to see these highs get above and then use them for shorts, right? We want to see that tapped in and then use for shorts. But as we can see right here, it closes below, closes above. I think this is the day. I'm not sure. Yeah. So right here is when it closed. Yeah. So it closed right when market opened. So, and then, even though it was in the other session, or maybe it was right when market, yeah, it was right when market opened. The candle closed. So I'm already looking for longs. So I see it tap back into this and then go higher. But as you can see, it hasn't broken structure to the downside. So when that happens, we're going to scale down to the 1 minute to look for our break of structure along with another confluence. So I see we tap back in. There's no break of structure here because we broke structure to the downside. We come back in, we tap in again, and this is when we're going to talk about inverse fair value gap. So we see that 3 candle pattern with the fair value gap. That fair value gap, if a fair value gap is closed above or below, and it doesn't respect it, it just goes straight through it and closes, that's called an inverse fair value gap. We can use that on the 1 minute to understand when fair value gaps are not being respected. So I see this fair value gap. I see the break of structure, which is with this candle. We break structure with this candle, and I see this fair value gap. We were respecting it, but we closed super bullish straight through it. So I'm noticing that we have strong bullish reactions. I put my stop right here. Where I think it was right here. And then I went to the 15 minute. If I can actually find where this is. I think I targeted this. I'm not sure. Okay, so it was definitely these highs. Oh, I don't know, but you can understand how this would have went, because this was less than 1.5, so I wouldn't have taken it. So I'm not exactly sure where my stop loss and take profit was. You could have targeted this for a value gap. See, we have these overlapping for value gaps. That's where my take profit would have been. It probably would have been in the middle of this for value gap. This is that inverse for value gap. So yeah, you can see right here, it gets closed below. We could target the top, we could target the middle, we could target the bottom. But like I said, you just have to play around with it, because I wasn't taught this part with the inverse for value gap, with the 1 minute break of structure. I had to come up with that myself, and that's how I trade. That's how I've been trading. One thing I can say is for gold, you only want to do this New York session. I don't know about GBP, JPY, Euro USD, GBP USD. I know it works great for GBP USD. All the other pairs, you could try it out. Any Forex pair, it should work. Any session, I would say gold, stick to New York session only, because it's a USD pair. It's the majority of the volatility is going to be during New York session. Like, look at Asian session, it's just chopping around, and then look at New York session, boom. So you can play around with the times, play around with everything. I hope this helped. I hope you use this. I hope you can run up some money with this, because it's definitely helped me. It changed my trading forever, and I know you guys have been begging me for this video, so I really hope this helps, and I thank you guys for watching. If you have any questions, feel free to DM me on Instagram or leave a comment, and I'll get back to you.